All right, guys, welcome back to another episode of the Napoleon Macro Show. We're going to take a look at our infamous five. We have check marks across the board. The NASDAQ, S&P 500, the SPY, the SDOW, and the Dow Jones have all accomplished the levels that we've been exploring. As many people were saying that the markets are going to crash, getting short this market, we stepped on the other side and said, wait a minute. Look at these levels, and those are the levels that we're going to explore in a very short video, so let's get right into it. Welcome back, loyal family. If you're new here, we only explore price action. Welcome to all of my new subscribers. Let's go ahead and dive right into the charts here. So, all right, so today's February the 1st, 2022, and the previous close of the NASDAQ. We'll start with the NASDAQ. $14,930.05, slightly positive 3.2% for the day. Okay. All right, hope you guys are doing well. Here are the lines. Nothing has changed. $14,600 has been accomplished on this active weekly candle. So actually, I'm kind of jumping the gun here because this is an active weekly candle. It still has about 3 days and 11 hours to fully develop. But what I will say is if you guys are pulling up your Fibonacci retracement levels, the moment that it actually breaks above one Fibonacci retracement and then the next, you just want to make sure that they're using them as support, just kind of walking up the stairs, right? So right now, the NASDAQ has accomplished a 0.886 if you're new. This is a red line down here. And that level is at 14,671. No, what I'm going to do is go over all the levels that the market has accomplished. So essentially, again, you want to see it walk up the stairs. So if it is above the blue line, if it uses it as support, then it will likely go to the next relevant Fibonacci retracement level. Okay, so I'm just going to go over the potential back tests across the board. Okay, so the NASDAQ is going to be the 0.786, and that level is approximately $14,907. Let's move on over to the SPY. All right, same thing with the SPY. We also have a check mark for the SPY. The SPY has accomplished the previous close of the SPY is going to be $449.91, slightly positive 1.8% for the day. Okay, looks like there's some buying coming in the pre-market there. $450.47, up 0.12% for the pre-market. Okay. So the same thing applies, guys. Remember, we're looking at active weekly candles. Right now, this weekly candle is above the 0.618. That 0.618 potential walk up the stair level, right, is going to be $447 and about 19.6. Again, that's the 0.618. Let's move it on over to the Dow Jones. The Dow Jones is here. The previous close of the Dow Jones is going to be $35,131.87. Slightly positive close, 1.1% for the day. Okay. All right, so the Dow Jones is actually just below the 0.618. So it's like $7 shy of that level. So during the market hours today, if you notice any resistance near the approximate $35,142, about 81 cents ish, okay, then it's likely that level may have a little bit of resistance, okay? But if we can accomplish that level, of course, that would be the stair step that it's, walking up above, right? And then making its way onto the next level. I'm going to erase the 0.382. I rarely follow that. It's a whole another video, but let's just say that although we are going over the Fibonacci levels, walking up the stairs, right? If they're breaking above the levels and using them as support, please understand, guys, the ultimate obligation from the buyers right now, although everything looks great and the market is appearing to tear to the upside, all of these indexes or assets rather must make new highs. Okay, please understand that the goal from the buyers at this point is to make new highs. Okay, so if it looks really good out there, everyone's bullish, everyone's saying it's time to go all in. Please understand, it must make a new high. Just pull up your charts, guys, and find out where those new highs. I guess, for example, on the Dow Jones, we'll use this one as an example, $36,964 approximately. So the time frame would be, let's give it a full 5 weeks, assuming that there's no red weekly candles to close. It should not take longer than 5 weeks, including the 2 weeks that you see here on the chart. Okay, so that's a time frame of approximately, please don't quote me on this, guys, towards the end of February or potentially the beginning of March. Okay, we should be teetering near or attempting to break through the all-time highs across the board. Dow Jones, NASDAQ, SPY, S&P 500, all of them, okay? Please don't quote me on that. Thank you. All right, so the Dow, the SDOW is going to be previous close, $28.55. Slightly negative close, 3.4% for the day. Looks like a little bit of selling interest is coming in the pre-market, 28.49, down 0.2% for the post-market, the pre-market, sorry. All right, so this is also what we were looking for. We also have a check mark on this active weekly candle. I have to keep specifying it's an active weekly candle because towards the close, it could kind of zip tie right back above that level. So you always have to understand that active candles, you should never base your thesis 100% on an active candle. It's better to understand the close of said candle before making an assumption of what could take place next in the market, okay? All right, but nevertheless, it's below 29.50. That's a good sign. There's no real Fibonacci level to watch on this. There's just this one level, guys, 29.50. If it is not able to, kind of break above that level, and if it is using it as resistance, yes, then it's naturally the trend will continue. The SDOW will move lower and the S&P 500 will move higher because the SDOW does the opposite of what the S&P 500 does, okay? And last but not least, let's look at the S&P 500, okay? The previous close is $4,515.54, slightly positive 1.8% for the day, okay? I don't have any Fibonacci levels on here. I guess I could put them up very quickly. The last thing what we're going to do is we're just going to take a sneak peek at what we were following on the S&P 500 to determine whether or not it was actually going to continue the overall trend. But I definitely wanted to show you guys the Fibonacci levels. Remember the Fibonacci levels. We're going to use them the same. Walk up the stairs, a red line, accomplish, stair step, up. 0.786 up. Right now it's above the 0.618, and that level is, if there's a back test and if it holds, not guaranteed to hold, not financial advice, $4,485.81. Okay, if that stair step can be accomplished and walk up that stair step, the next level would be it's going to have fluctuations, right? It's not just going to go straight to the all-time high, but we have to give it time, about 5 weeks. You're looking for green weekly candles around the approximate time of the end of February, beginning of March, to potentially teeter near the all-time highs. Okay, maybe it'll take less time. I'm not sure. I have to be conservative with the time. But let's end things out here. It's getting pretty long. I just wanted to give you guys a quick update on the 50 exponential moving average, the two things that we were determining whether or not the market was going to crash. As many were saying, the markets are going to crash. We were just looking at the 50 exponential moving average. We wanted that weekly candle to close above that level. It was beautiful, very, very nice, beautiful check mark. And I think we can have an official check mark for the 4565 weekly RSI. It is currently above that level. Again, active weekly candles. Okay, so please keep in mind, let's just be open to volatility. If it changes towards the close of this weekly candle, that's just the nature of the beast. The markets are going to do what the markets want to do, and they are volatile, and they can change the snap of a finger. So just be prepared, all right? But again, if the levels are holding, yeah, guys, get out of the way. If you're trying to short this market, that's probably not a smart idea, okay? And I guess a comparison, last thing. If you're new, I just want to kind of show you. This is what we were comparing it to. The video's over, guys, if you've already seen this. But I just want to kind of show those who are new with us. We were just comparing what happened back in the day. Okay, so I guess moving forward, like in the future, if ever there's a retracement, which there will be a retracement in the future, okay? The one thing that I would focus on, if you're kind of a macroscopic guy, I would look at my weekly candles. I would pull up my 50 exponential moving average, the green line right here. And the moment that you get a weekly candle to close below that 50 exponential, this is what happened back in March 2020. We got a weekly candle to close below the 50 exponential. two, we got multiple, and then we got this full candle in March to close the candle's body below that 50 exponential, while simultaneously we got a weekly weekly RSI closed below the 45.65. These were the two red flags to happen just before the gap down, because as soon as that happened, we got a weekly close below the 50 exponential, and then we got a full candle's body to close below the 50 exponential back in March 2020. It immediately gapped down. I mean, it was a vicious drop to the downside, presenting a very good buy-in opportunity for those who were strategic enough to seize that opportunity. But I just wanted to show you guys what to look for in order to truly determine whether it's going to be a crash or a drop. Those are the two things that you need. That's the recipe or the blueprint to determine an actual drop. Okay, 50 weekly close below the 50 exponential, and the RSI close below the 45.65. That's all I have for you, wonderful folks. Excuse me. So hopefully you enjoyed that. Hopefully that was repetitive enough for that one person who just doesn't understand this stuff. But this was a clean picture to paint for you to understand a true retracement by looking at the weekly candles and a level on the RSI and one moving average. So I won't take any more of your time, guys. If you don't mind supporting the channel before you go, this is the actual end of the video now. By leaving an appropriate thumb, I would truly appreciate it below the video if you enjoyed the content, and leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your support. If you guys are new, we also explored the alternative markets. If you're into Bitcoin and altcoins, you can kindly subscribe with us, hit the bell, and we'll send that out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy before you enter. Keep that positive energy flowing. We'll talk soon, and bye for now.